Great afternoon, everyone. Happy Wednesday. Take your time getting into the room. We're really excited to have you all joining us. Once again, happy Wednesday, because I hope you all been getting wins on this Wednesday. We're excited for our event today. Thank you all for being willing to join and be a part of it. We're excited to talk about buying or selling your business with confidence. As a SBA lender, we love this work and we love seeing people create wealth through buying and selling businesses. And so we're looking forward to our event today. We will be meeting from 3 o'clock to 4 o'clock, quick hour of your time. We are aiming to make sure it's as informative as possible. Just to make sure folks have time to trickle into the Zoom room here, we're going to take a couple of minutes just to let folks get admitted, get their microphone sorted and everything, and then we'll kick it into gear in a couple minutes here. But thank you all so much for joining. You still have time to send the Zoom link to somebody else, to get a colleague, to get a friend, to get a business partner, an opportunity to learn more about buying or selling their business with confidence. So what I'll do to make sure everybody has access, I will drop the Zoom link into the chat again. Feel free to text it to somebody, email it to somebody so that they can take advantage of the value we're going to provide through this event today. Once again, we'll take about 2 more minutes, let folks trickle into the waiting room, and then we'll get it going. Thank you all so much for joining, and we will be beginning soon.
Somebody in the chat.
All right, so we will wait about 1 more minute here, gang, just before we get it going. As you're in the waiting room, waiting for us to get started, as we're waiting for anybody else to join and get their microphones and their cameras set up and everything. If you have any questions that are just running through your head as you're thinking about buying and selling a business, how the financing works, any of the legal considerations, feel free to pop them in the chat. We are going to be closely managing the chat. Okay, Anthony, I see you. You said you don't have any audio. Okay, yeah, this is why we always take those couple of minutes. I see your microphone button has come on now. Hopefully you can hear us okay. Let us know in the chat if you can. Okay, sweet, Anthony. Awesomeness. Yeah, this is why we always take a couple of minutes, right? We want to make sure everybody can hear, everybody can enjoy the experience today. So really awesome. All right. So let's have some fun talking about buying and selling your business with confidence. We're going to jump right into our presentation. We have a couple more folks popping into the waiting room. And so if you see people trickling in, just keep rolling. We're going to be accepting all questions in the chat, but just as Zoom etiquette, please make sure to keep your microphones muted so we don't have any background noise. And we're going to have some fun. But once again, questions, comments, thoughts, inquiries, curiosities, pop in the chat and we'll be sure to address them at the end of our presentation today. But with that, shall we begin? Hunter, on to the next slide, sir. All right, so who the heck is Impact Business Capital? We always like to start with make sure folks know who we are. How do you have the credibility to talk about buying or selling your business with confidence? Who are you? Well, we are a 501c3 mission-based lender authorized by the United States Department of Treasury and the United States Small Business Administration. We are an SBA lender and a CDFI mission-driven lender. We finance business acquisitions and business selling. And so we really aim to uplift communities and strengthen families and advance entrepreneurial dreams from cradle to legacy. And as you see today, our conversation is much more focused on legacy, that last mile of your business journey, where you're either selling that business at the end of it or looking to buy it instead of starting a new one. What does Impact Business Capital do? Simple and sweet. In a nutshell, we do government-backed and private loans for growing businesses, small as $5,000 all the way up to $30 million and above. We have SBA 504 loans for business acquisitions, improvements, construction, refinancing buildings, also for used and occupying business operational facilities. We also finance long-term equipment and machinery with our SBA loan programs, but we also do direct lending for working capital, inventory, business acquisitions, and more. We administer the SBA microloan program, the SBA 7A Community Advantage program up to $350,000, which we'll be talking about more in depth today. But to make us a little bit different, if we aren't already enough, we're actually the nation's first faith-based SBA lender. And we really champion an entrepreneur ecosystem, which is business advising. It's helping folks find best fit lending partners and loans for their business. We recognize we can't do everything, right? We're only one agency. And so we really aim to be that partner that helps point folks in the right direction, even if we can't serve them directly with our loan products. We also facilitate training programs for startups, early stage and growing businesses through our ecosystem. This event today is an example of one of the types of training programs we like to facilitate. We're going to be hosting more events coming into 2024 around different topics. And so if there's something that's on your mind or something that you're trying to get more insight on as it pertains to access to capital, specifically SBA loans or CDFI lending, give us a shout. And we'd love to support our community in educating them with these types of programs. But we partner with a lot of the SBA resource centers, SCORE, the Small Business Development Center, the Women's Business Center, different university partners, different entrepreneurial centers, and more. We work with private partners. Some of our partners are here on the call, and you'll be hearing from one of them today. But at the core of what we do, we advance entrepreneurial dreams. And so if we can be a resource to you in doing that, we are so grateful too. With that, Hunter, we can move on to the next slide.
Alrighty, guys, so let's hone in on one of the main programs we use to finance business acquisitions. This is our 7A Community Advantage program, and it goes up to $350,000. This can be used for the purchase of equipment, machinery, furniture, fixtures, supplies, or materials. In some cases, the purchase of real estate, including land and buildings, specifically assisting in the business acquisition, operation, or expansion of an existing business, and refinancing existing business debt under certain conditions, and lastly, working capital. Now, the process of buying or selling a business can be very intricate, involving legal, financial, and some operational aspects. So these are some things to consider. First, the specific intricacies of the business you're purchasing or selling. For example, consider a small manufacturing business that has complex machinery, long-term contracts with suppliers, and a diverse product line. Understanding these intricacies of this production process, the supply chain, and contractual obligations is essential for a potential buyer to ensure a smooth transition. Second thing, do you have experience in the industry of the business you're acquiring? Here at AMPAC, we don't demand experience, but we really love to see it. If there is a lack of experience, we may ask the buyer to contribute more of the equity injection. And we'll talk about that a little bit later. There will be industry-specific compliances with different businesses. We will touch on this a few slides later with our legal expert. Valuation methods. I don't want to go down a rabbit hole, but we will be evaluating tangible and intangible assets. Tangible assets are things you could hold physically. Intangible assets are things that you can't hold, like goodwill. For example, Subway. They have a lot of goodwill. A lot of people know the name. A lot of people know $5 footlongs. They're not here anymore, but a good example. Lastly, due diligence. It's so very important. This includes a very comprehensive examination of the business financials, the operations, the customer base, and the potential risks. And I highly suggest, if you're looking to buy or sell a business, to have a financial advisor. And we actually have a great resource, the Small Business Development Center. These are a group of professionals that provide business consulting for free. Alrighty, and I'm gonna hand this over to Langston. He's our legal expert.
I appreciate you, Hunter. Good afternoon, everybody. My name is Langston Tolbert. I'm a corporate attorney. I enjoy, or I should say, I run a law firm where we enjoy helping entrepreneurs with various corporate matters, including corporate governance from formation to restructurings, debt and equity financings, whether it be SBA, whether it be you're issuing shares to a venture capitalist, or if it could be you're an investor looking to syndicate loans, as well as or syndicate investments, as well as M&A. So I'm here today to talk to you about a little bit about the legal considerations when you're trying to purchase a business or sell your business. So I appreciate you, Hunter, for handing it off to me. Uh, as Hunter mentioned, one of the best things or one of the most important things when you're looking to purchase a business is to be the due diligence that you conduct, making sure that all the proper contracts are in place, particularly the material contracts with a company. So, for instance, what's something you might want to do is say, hey, let me see the contracts for your top 10 best customers. Making sure things you want to look out for is making sure if we do this transaction, nothing's going to be tripped up. The main thing you're looking for from an M&A perspective is going to be a change of control provision, where it pretty much says that, hey, in the contract, if you were to change the control of this company, or buy or to sell the company, I have, as a third party in the agreement, the ability to say, hey, I want to break this contract. If it's a top 10 material customer, or client, this is definitely something, that will destroy the value of the business. So as a buyer, you want to make sure that you avoid, that you're aware of these things and figure out a way to either not trip them up or to account for them in the purchase price. Also, you want to make sure that the company is actually valued correctly, and that's not valued correctly, that the organizational documents actually set up correctly. You want to make sure that the company is actually owned by the people they say it's owned by. You want to see what the cap table looks like and things of that nature. You also want to examine the existing liabilities and debts to make sure there's no liens on the things that you're buying. And this and the third. Hunter, you can go to the next slide. Other things to consider are definitely, number one, how are you going to actually buy the business? Are you going to buy it buy the assets of the business, or are you going to buy the equity of the business? Both of these have different considerations, and usually buyers prefer one method, so prefer the other method. Buyers generally prefer buying the assets of a business because it allows them to keep the liabilities that they don't want with the seller. Sellers, usually like doing selling the stock of a business because it helps them, leave any or distinguish any liabilities that might not disclosed, but also it's faster. Other things you need to consider as well are closing conditions. You want to make sure that when you do sell the business, or you have the certain closing conditions in place to make sure that, hey, you got the consents you needed to sell this business. Hey, you told me that you're going to get this taken care of before actually you release control of the business. And this and the third. Another thing you also want to consider is also how you're going to finance a business, is why you have SBA loan and SBA financing. So yeah.
Alrighty, so let's
I have a question.
Yes.
For Dalbert. Dalbert, thank you very much. Can you elaborate more on the difference between asset purchase and the stock purchase?
Yeah.
Advantages and disadvantages.
Yeah, one of the biggest advantages of an asset purchase for a buyer is the fact that you get what's called step-up basis. So a step-up basis is pretty much saying like, hey, the value of these assets that you're buying, the seller never got a chance to actually put a value on them. So since they bought them or since they've acquired them, when you buy the assets or you sell the assets, it's a time where now you can actually put a value on the assets. So from a buyer's perspective, you get to what's called stepping up the basis. And by stepping up the basis, it means that, hey, these assuming that these assets have appreciated in value, you can say that, hey, now I know IRS or whoever is valuing this assets for tax purposes. This is actually worth 2 times as much as the seller was carrying them on the balance sheet for. And because of that, you get to say that, hey, I want to depreciate these assets. I have more room to depreciate these assets. High level, that means that you get to actually keep. High level means more cash flow for you because you have more tax write-offs because you got to value the assets at a higher basis point. Also, again, one of the best things or about a stock purchase agreement, or one of the reasons why many people might want to do a stock purchase, is because from a seller's perspective, is because you get to avoid a lot of the consents that you may be able to avoid a lot of the consents that might be required if you were to do a stock purchase. I mean, an asset purchase, because those provisions might not necessarily trigger that change of control provision that I mentioned.
And which part of the types the liabilities fall under?
Excuse me, can you say that again? Sorry.
So which type of the two purchases liabilities will fall under? Is it under stock purchase? I'm assuming it's gonna be the liabilities under the buyer, or it's gonna be fully.
What do you mean by liabilities? You mind elaborating on that?
Liabilities like disaster loan or payroll payment protection loans, any other liabilities for the business?
Those liabilities, I'm not sure if I understand the call to question, but I would say again, if I'm just buying the assets of a business, I'm just taking the asset under my name now. The seller will still, or the entity, the seller entity will still keep everything. But now, if I were to buy, and I'm hoping this answers your question, if I were to buy the whole entity itself, any liabilities that entity has, that the company has, will come over to me. So say like, you know, it might be a pending lawsuit or something that happened, a lawsuit that might have happened before or could have happened before. There's a better way to say it is something that happened 5 years ago that I was not in control of the company at the time, but now since I bought the company via a stock purchase agreement, now that person's coming to come sue me because I am now the legal owner, and all of those acts that happened even before I was the owner of this company can come back to haunt me. So that's why as a buyer, you rather have high level in general, you might rather have the assets under purchase rather than purchasing the whole stock. And I hope that.
Yes, sir. Thank you very much.
Mm-hmm.
Perfect. Thank you. All right, let's move on to the benefits and the risks of financing or business acquisition with SBA financing. Benefit number one, you have immediate market entry. You don't have to worry about building up a customer base. You don't have to worry about struggling to compete in a market. Two, established customer base. You know, based off the financials, that this business has a good customer base. You'll be being inserted right to that. A proven business model. Obviously, if we determine that we do want to finance this, that means we believe this is a proven business model for you. Operational efficiency. You know, based off the financials again, you'll be able to determine business is efficient. Protections of hidden liabilities and risks. This is a really big one. When we're analyzing financials, we do a pull of tax transcripts. This is a process of verification for us. We had something recently happen where we had a guy looking to buy a business. We'll call it Bob's Burgers, right? On paper, it looked like a business that could really soar. It's a lot of great profit. Gross was great as well. But when we pulled the transcripts, we found that every single line item on that tax return was zero. So we had to turn that deal away, and therefore we protected the buyer from that. Once again, eliminating financial uncertainty. We do our part to ensure that this business is going to be, this is one of my first presentations, so my apologies. A little nervous here, but.
I believe you meaning like by eliminating financial uncertainty, they go through evaluation, business evaluation, so you make sure that you're paying for what you're getting for.
Exactly.
I think that's what you mean.
Exactly. And lastly, the SBA will require the seller to be involved with the transition for at least 3 months. This is crucial for the success of the business. The risk, customer and employee retention, that's something we really can't control, obviously. And market and industry risks, those are things that we don't have much control over. Now, capital injection or down payment, we will require an equity injection, skin in the game, your own money into your business. This cannot be borrowed funds. And eligible sources can be savings, home equity line of credit, family or friends, it can be gifted. And lastly, we could do a seller carryback. Now, what a seller carryback is, let's say we have someone who wants to buy a business for 100,000, but he can't afford the 20% equity injection. We give an option, the seller and the buyer can reach an agreement where seller will cover the down payment and they will create terms and interest rates on their own. And we can do that in 2 ways, a full standby first. Within the first 24 months of the loan funding, the buyer will not make any payments to the seller. This greatly helps cash flow. The business owner will not have to worry about making payments to someone else besides the lender. And of course, there are business debts. This also lowers the tax liability for the seller greatly. And then we have the partial standby. This will be interest-only payments. Payments are effective at time of funding. And this, of course, hurts cash flow because the buyer is now having to pay the seller and the lender.
Yes.
Now, these are our SBA required documents for financing a business acquisition. We will require 3 years of federal tax return business from the seller, 3 years of personal tax returns from the buyer, a personal financial statement from the buyer, personal credit reports from the buyer, bank statements, recent 2 months from the buyer. This is to verify the equity injection. We're gonna look at the balance before and after to determine that the money is being put in the right place. We'll also ask for interim financial statements within the last 60 days, a balance sheet and an income statement. We'll ask that these will be dated through the periods of 12/31/22, as well as the most recent month. So we're in December now, so we asked for 11/31/23. We'll also require a business valuation. And something to note is we're gonna find an approved vendor that we know and that we trust, which is huge. Lastly, we do require a lease agreement to match the loan term. So for example, you could do, for our community advantage, it's a 10-year term. So let's say the owner of the building do a lease for 5 years and then another option for another 5 years.
I just want to comment really briefly here how critical these documents are in this vetting process of buying a business. Like Hunter was sharing the story of how we saved a business owner from getting into a deal that they didn't fully understand. They didn't know how to pull tax transcripts. They didn't understand that what was on those tax returns wasn't necessarily true. And so it really speaks toward the value of having good partners who can support you in doing this due diligence. And if you don't have good partners to support you in doing that due diligence, we would be honored to be that partner for you. And this checklist that we're notating here, yes, is for the SBA, but if you are buying a business, these are documents you should be collecting yourself regardless to do your own due diligence. Obviously, if you're aiming to acquire financing, these are the documents we would request, but you can see these are simply best practices for documentation collection as it pertains to a business acquisition. And so, Hunter, thank you. That is accurate.
And I did want to touch back a bit. Our 7A loan goes up to 350,000. Let's say you wanted to buy a business that was 420,000. we can companion the 350 loan with a direct loan. And that direct loan can go up to 150,000. Additionally, let's say you wanted to acquire a business and the building with it. Let's say the previous owner of the business also owned the building. We can finance a building through our SBA 504 program, as well as companion with our 7A. Awesome. We got any questions, any comments?
I do want to call out a couple of comments in the chat from Anthony. He sent it to me directly, but just such valuable points made. I definitely want to make sure the group hears as well. Anthony notated another way to solidify value is ensuring the accounts receivables. So we have a very brief documents list that you all saw on our screen, but there are more documents that you do want to consider outside of the financing side of buying a business. There are additional due diligence best practices. And so when we are referencing have a partner, have an advisor, those are the types of things we're referencing, pieces that you just don't know about. And for those who may be interested in buying a business, people on this call do have expertise. And once again, this is what we are referencing when we're talking about the ecosystem. We want to continue to bring you people who can support you over the course of these kinds of critical decisions as well.
Can I piggyback on that as well, Brian?
Of course.
Yeah, thank you. No, I want to just emphasize that I think I was actually talking to one of my business partners today about that. I believe a lot of entrepreneurs fail, and I'm an entrepreneur myself, so I'm not excuse from this, but we fail many times not surround ourselves with a great team. Having a great team is, you can't know everything. And I know entrepreneurs, we're very DIY. We very feel like we can do, because that's how we got to where we got. And I get it, especially when you need to be frugal. But you can't replace having a great team that knows what they're doing. So if you can find good people, it can increase the value, whether you're on both sides. And I think it's best for both sides, because the best M&A can be a zero-sum game. If one side gets something, the other side has to lose something per se. So if you can increase the value of the deal for everybody, we all win out. So I think if you have good teams on both sides, increase the value of a deal. So for instance, if you're someone that's looking to sell a business, making sure you have an M&A advisor, even 5 years out. So that way you're not doing a fire sale, and that way you can actually, build up the value of your company. So when someone is doing due diligence, or if I'm doing due diligence, I see that I have a 5-year record of this company being at this valuation, or being at this, doing these type of numbers that invoke a certain valuation. Or being on the buy side, again, making sure you have great, not only legal due diligence to see if there's anything that doesn't look right that might be, cause the value of the company to be not as much as the seller says. Again, for instance, say there's like a contract there that's going to run out in a year or something or whatever, and then also place a monetary value on that. But also having great financial due diligence, also having great operational due diligence. So I think it's 100% worth it to invest in having a great team around you when you're doing any of this process, especially because, this is usually a one-time thing for most people. You only got to do this one time. So starting to tell people that do this all the time is extremely valuable.
I want to call out 2 more comments that came into the chat while Langston was sharing there. Myron mentioned some really qualifying points of what a great team consists of. And when you're looking at who's a part of that great team, seeing a CPA, an accountant, right, a tax accountant, an attorney, you may have met one today. I don't know. Maybe. All right. A lending partner. You may have one in the room. I don't know. An insurance partner, right? And so some of these pieces are really valuable. And there was another notation from Myron. Myron, I don't know if you're able to comment on this as well, but he did mention 90% loan to value on commercial real estate acquisition, which is through our SBA 504 program. Myron, do you want to add any context on that?
Yeah, I mean, obviously, good afternoon, everyone. As a part of the Impact team and having done some transactions in my history of my career, the main thing is that you want to look at both the business and the real estate as 2 separate assets. evaluating, the worthiness of each. And if the seller is selling both the property and the business, they must be handled separately. But of course, all affecting the overall cash flow of the business. We do offer under the SBA 504, if it's not a special purpose property, up to 90% loan to value financing, whereby you would own the property and usually lease it back to your operating company. So you can take a tax advantage there, but also with only 10% down, it's a pretty aggressive situation as long as the cash flow is there to debt service the remaining loan amount. And we do also have a liquidity replacement product that we could maybe replenish your liquidity after making that 10% down payment, because you don't want to be broke cash wise just trying to acquire the property, especially when you're just taking over a new business. So those are different ways we look at every possible angle of how we could support your needs, subject to the financing, and then also the tax play of having the seller carry back some paper. It's an advantage to both him and you in this regard, because the actual sale leaseback is always subordinate to the main lender, such as ourselves.
Excellent. Excellent. Thank you. Thank you. Thank you. Thank you. And I'll call out one more piece in the chat that is relevant as we're talking about business acquisitions. One of the pieces that you do have to consider when you're looking at loan to value on SBA 504 lending options as well is that the 90% loan to value is if it is an existing business, which hopefully right after today's conversation in general, that is what you are looking at. But if it is a new business, the loan to value for that will be 85% on the commercial real estate, as long as it's not a special purpose project, as Myron mentioned there.
And keep in mind, we consider any business 2 years or less a new business. So it has to have 2 full tax years under its belt to be considered a seasoned business.
Some other things, if you don't mind, Brian, I wanted to speak on is, I know I spoke somewhat on, deal structure, and obviously when people think having a lawyer on your side is about protecting you from existential crisis, which is true. Good attorneys is a great shield and protection, but having a great attorney, someone that also understands the deal and how deals run and what the business side of everything is also a great sword. Having an attorney that understands how to creatively structure transactions is super valuable. Someone that can help you bridge a valuation gap, saying that, hey, I think the business is worth this much. No, I think the business is worth that much. And then depending on how you structure a transaction, you can help people come together. For instance, not only do people, use SBA loans to finance transactions, but you also might have some seller financing, which is saying that the seller itself is going to give you a promissory note on the business, and you can have, structure it where, that valuation gap, the gap where you believe that, the disagreement where you believe the company's valued, you can pretty much have a bet, where it's like, hey, if you believe it's valued this much, seller, after the transaction's done, I'll give you a note and to make up the difference. And if you're right, you're right. But I'll say that also that one of my good friends says all the time when we're structuring transactions or making deals, terms over price. It's better to get good terms and like the price, but whatever that might mean to you. And I said to say that I believe most deals, if they're seller finance, you actually get more money from a seller's perspective. You might have to wait, it might be delayed gratification, but you're going to get more money on average. But that being said, you want to make sure that you're also, as a seller, doing business with somebody that's actually going to actually take care of your business and actually make do. So choosing the right buyer that's actually going to pay that you can count on to pay that seller note. But those are some things I want to talk about that I didn't get the chance to. I sped around to everything, but yeah, something I just want to say.
No, that's good, Langston. And as you all see, this is a conversation. Yes, we're bringing information forward, but we're here to communicate and have a conversation about what this process looks like as pertains to SBA loans, some of the pitfalls that we see that we want to make sure you all are able to not only watch out for if you're individually looking at a business acquisition or a sale of a business, but you can also inform your community better. with information that you do have. And I did see another question come into the chat. What are the minimum credit requirements when purchasing or starting a business? With our SBA loans, we look at a minimum credit score of about 640 for our SBA 7A loan program. And so as it pertains to the SBA financing of purchasing or starting a business with an SBA loan, that is what we look at as the minimum credit score. That's a great question. Thank you for putting that in. And then, oh, Myron, you're coming in with heat. Oh, I love it. So I do want to make sure I call out what Myron put in the chat as well. And Myron, feel free to opine as well. But he did notate that seller financing should cover any intangible assets of the business acquisition. Once again, we talked about that as goodwill, right? The Subway brand name, the recognition of the $5 foot long, right? Those aren't things that you can hold in your hand or put a valuation to. But when you're looking at seller financing, can the seller financing cover any of those intangible assets as well?
Although, Brian, to piggyback that, it's basically the 7A loan program will enable the buyer to finance the goodwill into the deal. So that is allowable and eligible for SBA financing 7A.
Excellent. Excellent. Okay. Well, I do want to make sure I open up the floor one final time here. And oh, I love it. And as you all may see in the chat, you have more resources in the room. But let's stay connected here. I am going to shamelessly plug our entrepreneur ecosystem. If you all are not already a part of our mobile app, you can type in Impact Business Capital and join our ecosystem. We're big on keeping folks connected long term for these kind of conversations to continue. And once again, our goal as an entrepreneur ecosystem is to continue to educate business owners and business service providers around topics that are relevant. And so, Anthony, I know we were talking about looking at a credit event in 2024. And so if you all see needs, opportunities, possibilities, solutions that you believe education can be enhanced around, we'd love to partner with you. We love hosting events like this where we can get in front of the community and just share some of the best practices and bring people together that truly are power. But I do want to take this opportunity once again to open up the floor. Are there any other questions or any other thoughts or even best practices that anyone wants to share at this time as we start to come to the conclusion of our event today?
Last thing I want to say is also, I know we didn't get a chance to speak on it. I know we're talking about debt. I mean, yeah, financing stuff with debt, but also just consider, knowing that you can also use equity to finance these transactions as well in combination with debt. I just wanted to throw that out there high level.
That's excellent, Winston. Yeah. And
Oh.
Go ahead.
Oh, no, I just wanted to get a quick comment about understanding how the business that you're acquiring, the industry dictates how it will be evaluated in an evaluation process. Some are done by gross multiples. In other words, your gross revenue as of the value is a multiple of that figure, or it could be something based on the net operating income after adding back, non-recurring and non-tangible cash flow with the cap rate. There's various ways that different companies are evaluated, whether it be service, manufacturing, distribution, professional, what have you. So all those things come into play. So, know your deal. In other words, understand the industry, understand how it is valued, and make sure that you're buying a asset, a business, not the liabilities, but you're buying a business, a bulk sale transfer of assets in such a manner that you'll get a good return on your investment like any other investment. And then again, do not buy a corporation stock. You're buying the assets and liabilities in those transactions. So those are not covered. That's not a covered transaction under most lending programs.
It's a great point, Myron. Thank you for that. That was excellent.
I got a couple things, Brian, if you don't mind.
Yeah, go for it, David.
So, hi guys, David Namazi. I'm sorry I missed the earlier part. I didn't have the link, but I'm an accountant and I do the forensic audits in the background to get all this stuff pre-qualified. The biggest thing that I would caution, out of all the experience of doing this for many years, is you need to make sure you have a qualified professional vet the deal if you're gonna acquire and buy something. That means an accountant, CPA, somebody that can go back and look at the last 2-3 years of the accounting record for the company and make sure what they're presenting to you is not a bunch of smoke and mirrors. Because what I've seen too many times is somebody goes back and buys something like a franchise and they're told all these great things of potential, but they find out the franchise took a loss 3 years in a row and won't really disclose that fact. So you need to know what you're buying and the whole thing of knowing your numbers, but doing a forensic point of view to make sure that those numbers are accurate and provable to the bank record of the company.
David, that is excellent, and we're so happy you're able to join. One of the examples that Hunter gave a little earlier in the presentation was a Bob's Burgers acquisition that did showcase a difference. The tax returns said one thing, showing the business was profitable, but when we pulled the transcripts, every line item was zeroed out, and that business had no functional monetary operation. And so it's so true. You have to do due diligence and have a team that can support you in doing that. Absolutely agree, David. That is an excellent point. Thank you for that.
And Brian can forward my contact. So if you guys need to reach out about, if you want to actually acquire something and vet it, I can help you. Consult's free for half an hour, so feel free to reach out.
That's fantastic.
I do like to call out the members of the ecosystem. David is a member of our ecosystem. So if you are on our mobile app as well, go to the directory, you type in David's name, you'll see him. Miles Ross is also in our ecosystem. Langston Tolbert is in our ecosystem. Anthony, I'm not sure if you're in our ecosystem yet, but I see right now. I just looked too. Anthony is also in our ecosystem. And so the goal is to continue to build partnership pathways for all of us. Lionel is in our ecosystem as well. And so it's a blessing to see ecosystem members and community leaders gathered to learn from each other and grow together. And that's what we're going to continue to do. That's the mission of our ecosystem. And so once again, as you all see opportunities, as you see possibilities, solutions, loop us in. We want to be this partner to really advance entrepreneurial dreams alongside each and every one of you. But with that, I'll turn it over to Hunter to close us out for today.
Well, thank you all for joining. Really appreciate getting the opportunity to speak to all of you and educate you. I just wanted to mention briefly, I don't think we talked about this, as a part of due diligence, really try to understand the company's culture that you're entering. I think that's really important and kind of overlooked. Like, here we've got such a great culture, and I've got a great team, behind me. I slipped up a second and got someone to help me out. So yeah, having really great people is a huge part of the mission. With that, thank you all for joining, and looking forward to seeing you soon, and get on the ecosystem, and let's connect. So thank you guys. Have a great week.
Thank you all. Have a great day.
Hunter.
Thanks. Cheers. Appreciate it.
Very good job, Hunter. Thank you.